Thank you for joining iMeet. When you hear the tone, you will be the 27th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. Today, if this is your first meeting, we're going to quickly review what happened over the last couple of days with the stock market and try to figure out what we want to do going forward. Today, we're going to look at some of the different sectors, see if there's any places that aren't overbought that we might be able to go into to find some good trading ideas. Then we're going to look at a place on the Market Edge site, one of the modules called early entry buys and early entry short sale candidates that I think would be helpful if you're trying to find some ideas for stocks that aren't just on a parabolic move higher. You know, maybe these are going to be stocks that maybe have gone sideways for a little while and now seem like they're ready to break up to the upside, or they had a nice move and now they've stopped and then they're going to look like they could go again. Before I do that, I want to correct a misstatement last week. When we were talking about the point and figure charts, I erroneously said that the point and figure charts were the 600-year-old charting method used by rice traders in China. I was wrong. I had a senior moment, I guess. But that's candlestick charting that they used to trade rice futures with. We'll go over candlesticks on another webinar. But I didn't want to think I was an idiot. I did get lots of a couple emails that correct me on that last week. But anyway, to start this thing out, last week we ended up with almost every index at a new high. Yesterday we had the Dow Jones Transportation Index also join the NYSE and Dow, NASDAQ 100, Russell 2000, everything else at record highs. Probably a glaring notice you'll see is that the CTI in market posture is currently bearish. We've been bearish since 12/23. At the end of this presentation, because I know a lot of you trade the leveraged ETFs that we do, I'll go over that and tell you where we are with that. And I don't want to leave you hanging out to dry on that stuff. But the CTI may be changing this week. Our momentum index went down a notch last week to a -1. It was neutral. The reason it was a little bit softer was because the Dow Jones outperformed most of the other indexes. What we like to see in a strong move up is we'd like to see the broader market outperforming the Dow. We're not quite getting that, although the NASDAQ 100 and NASDAQ certainly are beating that. Okay, sentiment was a neutral +0. We look at some different things, but we do have some extreme readings out there, which are real red flags. That's the percentage of bullish investment advisors was at 62.7% last week. Anything above 60% normally marks the market top. That was a 12-year high for that indicator. And actually, I think over the last 11 weeks, it's been above 55, which is bearish, looking at topping market. And 4 or 5 of those readings were actually over 60. So again, the extreme bullishness by some of the advisor stuff is worrisome. We also had the bearish advisors. They fell to 16.7%, which was also almost getting to an extreme level. I'm not sure that was last at that. I'm not sure when that was, but anyway, every sector last week was pretty much higher. We had it was led by industrials, technology, consumer staples, and consumer discretionary. Yesterday, on yesterday's big jump, we had the Dow up 142 points. That was led again by industrials, and the financials also came back in, participating in that. So, summarized last week, I had kind of the market was up pretty much every day, mainly on Trump talking about his phenomenal tax cuts that are going to be forthcoming. The market's ready for that, and some deregulation. So we'll see what happens to that. I also want to point out that we also have global markets that are actually hitting 18 to 24-month highs. That's actually adding confirmation to our market that we probably still can go higher. we talked a little bit about the emerging markets last week. And if you remember, when we looked at the point and figure early alerts last week, we mentioned on there that there were several emerging market ETFs that were up there, and also the EEM and a couple other ones. If you'll look over here at this, after going back into August, we saw we did get that breakout. So when you see these, we pull up these screens, and we're going to pull up a couple today. When you look at the whole list, one of the most important things is to ask yourself, do I see a grouping of stocks, like steel stocks, or in this case, we saw that there were several emerging market ETFs that were ready to break out from the point and figure breakouts. And it's very important because this really gives you a clue that this is a whole group that's breaking out, not just one stock. Sometimes you'll look at something like this and you have General Motors or something ready to break out, but that's the only auto manufacturer that's going to break out. That's not as strong a signal as when you have two or three of them all in that same grouping that are getting ready to move higher. So this guy just wanted to show you here. This is the emerging market ETF. Last week we broke out of like a triple top, I think, and now we're moving up to new highs. Had a little bit of a pullback today. I think that's because the dollar keeps working its way higher. If the dollar keeps getting higher, that's going to dampen the emerging markets. So you want to keep an eye on that. If this would come back down in this area here and take out this last resistance area, it would be because the dollar just keeps getting too strong. Okay, the first industry I want to look at real quickly is the industrials, since that was the leader last week. As you can see over here, it's kind of walking its way up it's overbought down here on the 30-day stochastics, but we're kind of walking its way up a channel. We've reached the top of that channel again and pulled back today. I would look to see if I'm looking to buy some of the industrials, the Boeings or whatever, I think you would probably want to wait until it comes down to the bottom of this channel around 63.30. That also coincides with the pivot point that we talk about on these things, and also it coincides with the 50-day moving average. So that's a real point of support for the industrial sector. Break below that would actually almost take out this back here in December. So keep an eye on that. If you do get a pullback to here, it might be a good entry point for some of these. It's kind of resolved the negative divergence that we saw in the 14-day RSI, but we also got a buy on the MACD, the shorter term. So that still looks positive, but I do think when you're at the top of a channel, the odds are that you're at least get a pullback at least to the halfway and maybe to the bottom of that. So I'm not sure I would be putting more new money into the industrials here. Here we have the technology sector. It's almost a parabolic chart on this thing, just goes up every day. But one thing that I want to point out here, this isn't negative divergence. This is positive divergence here, and also on the MACD. But when you have something going up to new highs or something going to new lows, what technicians look for is they'd like to see confirmation by volume. What I don't like is this right here. Is this thing's making new highs. It's making new highs on lower and lower volume, which is something to watch. That means that the new money's not going into this. This may be some short covering, people that have been shorting it over here, or whatever. This is not telling you that new institutional money or something's coming in. So that's a little bit sign of a top. If that would, you're going to need to see this thing over a couple of days start to come back up here on the volume to get confirmation of this move. Right now, it's telling you people aren't buying it, but putting new money into that. So that's something you want to watch on that. Okay, another one of the strong ones from last week was the consumer discretionary thing. This is stocks like retail groups. We like the specialty retailers, not the box stores so much. Restaurants, household appliances, leisure. Stocks like Disney, that type of thing. They've had a pretty nice little move up here. The divergence was a little bit of divergence over here. I wouldn't consider this anything more than just showing you it's overbought. Everything looks good. MACD is bullish. I don't see any negative readings in the volume. It looks pretty steady for this whole move up and down. So again, you are getting close to this upper channel. You have some stocks in this area, maybe the Disneys or something like that. I probably would wait to buy some of those until you come back down here. The bottom of this channel also works out, gets close to the 50-day moving average and also the pivot point on that. So You don't want to chase anything here, but on a pullback, that might be where you could put some money. Okay, this is the consumer staples. A couple interesting things on this. We talked last summer when we were doing the webinars that when rates were, the discussion was that rates were going to go higher, and we would talk about selling out of those. They did stair step lower all the way down here into December, which was kind of surprising. But one of the reasons this thing was higher was because of the high dividends that they pay, and if the rates are going up, that makes the higher dividend stocks a little bit less attractive. It's also down in here. We talked last week that this is one of the sectors that I probably would be looking to buy in. You do have some nice positive divergence here on the MACD. This is also confirming the move, but it's a little bit, not quite overbought on here, but it's going the right way on the 14-day RSI. That's strong. Overbought on the stochastics. But an interesting thing on this thing is a head and shoulders reversal pattern. Here's your shoulder. Here's your head. Here's another shoulder. And what happens on these things, if you want to see where this chart can go, if you take your finger and measure from here to here, or you can add the points, from 62 down to 49, and then add them on to where the neckline broke, take it up to here, and this sector probably should be able to get up here to the 50, almost to 55 on this thing. It should be able to work its way almost back to the old highs on that. So again, you have a bottoming pattern that's broken out, came back, kind of retested that neckline here and bounced off of that and went higher, broke through the 200-day moving average, and you also have the 50-day moving average coming up here to give it a golden cross. So again, consumer staples look good to me. I think that's an area that if you're looking to be buying, that you can probably put some money into that. Okay, we also talked last week that healthcare was one that we liked. It was coming off a bottoming pattern. Remember over here when Hillary was projected to be the candidate, we were worried about regulations for new drugs and that type of thing, and drug pricing fell off here. Once it became clear that Trump won, it jumped up. He had a couple of statements in here about drug pricing, but since then it's been able to work its way higher. And actually, he had the drug executives in there saying he'd like to get new drugs passed a little bit quicker. So you have a little bit of a march upward here. Looks good. No negative divergence here. Again, overbought. It's at 97 on the 30-day stochastic. That's the 14-day stochastic. So it's overbought, but I think you can probably work your way a little higher. There's no reversal pattern here, but the fact that we're breaking out above this old double top here is positive. I think you can probably look to buy some of the biotechs and the drug stocks. Next thing we want to go to is the materials sector. Okay, if we're going to rebuild the infrastructure, you want to have some money in this group. Again, we've got a nice upward channel going in this thing. We actually came back from here, tested the bottom side, and we're kind of working our way up a little bit higher here. Now, one of the problems with this is a stronger dollar can actually can cause these things, not the materials, but some of the commodities to go down. The stronger dollar could weigh on the materials sector a little bit. You do have some negative divergence over here a little bit. You're not overbought in this area here. You can see down here we're kind of neutral on this over here, but you're about ready to get another buy on the MACD. If you want to watch this thing here to see if this thing holds this area, any kind of pullback, you do have a chance to at least come down to the 50-day moving average. But I would look to buy these, on pullbacks. Now, crude oil prices, which I'm not bullish on, is also part of this group. We'll look at that in just a little bit. But again, with the infrastructure on pullbacks, you want to have a list of stocks in this sector that you want to add to. Okay, now here's energy. With oil coming down here, what you're seeing here is we had this big rise up here. This is mainly because the OPEC nations decided they were going to cut their output. But once above $55, which is where they wanted to keep it, the American rigs can come on board and start pumping, which is going to keep pressure on oil prices over here. I think that today we're at let me take a little bit. We're up a little bit, not much, almost flat on that. But if I think oil probably tops out somewhere down here around 55, maybe 56 if it really gets pushing. But I don't see a lot of upside in that. If we do get more of a triangle pattern here, we can see which way it goes. Now, also on the way down, remember we talked about confirming by volume, and this is working lower. We're getting a little bit higher on the volume, which is confirming that there was more, maybe a little bit more institutional side coming out of this. We bounced off of this trend line down here. The 200-day moving average is down here. We're working our way around the 100-day moving average right now. But I would think if we come up here and test this 50, that would be about as high as you're going to go. And today we're at 53 right now. We're having a hard time getting much above that. So, you know, again, this is not an area that I'm looking to add to yet. I would want to see this thing maybe come down here to check the 200-day moving average if we roll over. There's always a chance that with crude oil, you keep your eye on that $50 range. If we break below $50 a barrel, you can start getting some real selling in that thing and take it back down into the mid-40s. So I would watch that. Okay. Lastly, before we start looking at the early entry screens on the market here and Market Edge, I want to talk about the financials. And we saw we had some negative divergence on this. We were getting not too much, but you had some days that were some spikes in the volume, but we could not break out of this range. We finally got this last Friday, a little bit of a breakout. We want to see if this holds. Yesterday was big. Today it's also it's one of the leaders today. We're up about 0.75%. MACD went bullish, and anytime you have this, the rising rates and Trump talking about the Dodd-Frank, rolling back to Dodd-Frank thing, it's going to be good for financials. I'm not sure. I would probably look to make sure that the banks that I wanted to get into, an insurance company, weren't heavy into the mortgage area. You may get, if rates start to go up again, you may get a rush early for people to come in and finally get off the fence and close on a deal. But as rates start to go up higher, people may want to wait and see what's how high they're going to go or what's going to go, and that may slow some of the housing boom that we've got. So anyway, look at that. What we're looking at in different sectors, they all look good. I don't see anything really breaking down. Certainly if we get some dips here in the market, we had a big pullback this morning. We were down on the Dow almost 10 points. So I hope you all got a chance to jump in on that and buy the dip. But anyway, what we're going to look at right now on some of the different screens in Market Edge, when you have stocks like this or sectors in the whole broader market where everything just seems to be going up, you can almost throw a dart at it. What you want to try to avoid is just these stocks that have just taken off for the last 3 months and they haven't looked back. So what we'll look today is something called early entry buys and early entry short sales that are found 3 or 4 different places on the Market Edge site. And I think you'll find these screens helpful for looking at new ideas in this market. Now, the first place we're going to look at, this is on the Pro. If you go, it's under Analysis Tools. But if you go into regular Market Edge under Trading Ideas, you'll find a tab in here called the Trading Desk. Okay, the Trading Desk will give you some ideas. There'll be NYSE short-term buy candidates or NASDAQ short-term buy candidates, and also short sells on the NYSE and the NASDAQ. What these are stocks that are not quite a buy, but they are coming up to their buy stop. And I'm going to mainly be talking about the early entry longs today, because most of you don't short, and when the market's going up, I don't want you to be looking for short ideas right now. But anyway, you'll get a list of these stocks. These are all going to be under accumulation on our up-down slope that'll be up, and you also will be within a point or so of either above the buy stop or just below the buy stop. It's going to give you an entry price over here of where you should buy this. This case came up today. AES is the symbol. Okay, if an entry price was $12.15, okay, it's down 18 cents today from where it closed yesterday. So when you look at these, like we talked about the point and figure early alerts last week, if you put a buy ticket in here at $12.15, you'll buy the breakout. If it doesn't break out or the market's having a sluggish day, you're still on the sidelines. So these stocks, again, they're early entry buys. They're coming off of a basing pattern. They're under accumulation. Here's a couple of the last couple of days that actually did break out. And when you look at these, you also want to see what stocks currently broke out. Are there any stock groupings? And actually, it's hard to see on this, but 3 of the 5 stocks here are actually foreign stocks. So that's important again, because we want to, when we get these lists, we want to look for group stockings. That's telling you that, you know, money's starting to come in here, and these foreign stocks are actually starting to break out. So this is one area where you can find some of these early entry buy candidates. Another one would be over here at stock analysis. If you click on stock analysis under trading ideas, we have the best longs, which are the strong buys. And down here at the bottom, we have early entry longs and early entry shorts. You click on that, and here's today's list of early entry longs. Now, after I made this screen, I see that I used my report outputs, which if you go to Help Manage Account, you can come up with whatever indicators you want on this. But in general, it's going, most of them, if you use the default report output on these screens, you're going to get an entry price on each one of these. What I like to do is, and we list them by, you know, how close they are to the breakout price or the entry price. What I want to do on some of these, I want to take a look and click on the relative strength. I want to see what stocks here are starting a new leg up that are outperforming the S&P 500. As you can see on here, you have a couple that are like 1.02. So they're actually already come to be a buy, and they're actually already outperforming the market. Now again, if you go over here and look at this, besides your buy candidates, come over here and look at the list of stocks and see if there are any stock groupings. I noticed over here earlier, I wish I had printed this out because it's hard to see, but here's a Japan Equity Fund. Here's Power Shares Build America. That's, you know, we talked about the ETFs that will show up. It's a whole group that's going to be good to buy. Here's a Vanguard. I can't read that. I'm sorry, but there's a couple of different ETFs that you may want to go back and look at. If you pull this screen up today, they'll show you certain sectors or industries that are getting ready to buy out, to break out, and that's where you want to look for for some of these buy candidates. Not only the individual stocks here, but you can go over there. You can say, okay, well, infrastructure looks good, and go over to industry group and get a list of stocks in some of those different industries that you can buy. But this will give you a whole list of new candidates to take a look at that you may want to go into. Okay, another place where you can find the early entry buys would be if you go to StockWatch. Now, some of these lists under trading ideas, if you pull up all the early entry buys, it's a little bit hard to manage. But go to StockWatch, pull up your you know, what screen you're going to use, what report output, pull up your list of stocks that you like to buy. In this case, I used the 4 stars from S&P, and then go over to situations, and on that drop down, again, you'll find early entry longs and early entry shorts, and this time you're going to get a list of stocks that are just on your watch list, your buy candidates, and not just these are stocks that you should be familiar with. You know, maybe this is Goldman's best buy list, or Bank of America's best buy list. So you know these are fundamentally good, strong, solid companies, and this gives you 4 or 5 stocks, and it gives you a little bit more of a something that's more manageable for you to go. And again, if you use the default screen up here, you see default, and if you make your own list, you can change it over here. Again, we have the entry price, where these stocks are going to go in, where they'll buy. Now this AES that we saw, you know, it didn't hit the entry price. Here's American Tower, AMT. It didn't hit the entry price either. So the good thing about when you have that, you know, rather than just saying, hey, this looks good, let's jump in here and buy it. Okay, it didn't hit that entry price, so you know, so you're going to be on the sidelines until it breaks out, which is good. So you're not tying your money up, and you're kind of front running the long opinions. But then all of a sudden you get you know, the thing goes against you, because it's a little bit more. You know, sort of your front runner system, so it is a little bit more, you know, a little bit more aggressive to be buying on these things. Okay, before I go into this last one, anyway, just to review that, you know, when you have these stock the indexes like this in the market where everything seems to go up every single day, rather than just chase relative strength, sometimes it's best to look at the stocks that have maybe had a little bit of a sideways pattern and then look like they're getting ready to start a fresh leg up. And by looking at the early entry longs in the Market Edge site, I think that's a good place to find some buy candidates for you to look at. Okay, so I promised some people I would talk about and update the CTI, and I think it's kind of important to go. The CTI is a cycle, if you're not familiar with it, that we see running through the market. Last year, our cycles we were up something around 15, 16%. Year before, we were up 18%. We basically doubled the performance of the Dow. We've had webinars where we talk about buying the triple leverage ETFs, where you buy the Dow, the S&P 500, the NASDAQ, and the Russell 2000. So I wanted to update you where we are on the CTI. As you know, right here we went to a buy on the market, and we went to and we went to a sell right over here, and we projected that the cycles were going to bottom somewhere over in here at the end of January, early part of February. Okay, this isn't an exact science, and when we do the cycles, there's a lot of adjusting going forward and backwards. It doesn't change what our performance is, but in this case, it looks now like the end of the 4-year cycle would have bottomed here with the election rather than going forward. And a lot of times, after election, you do get a pullback in February, but in this case, at first it almost looked like we were going to have like a blow-off top, where it moved so fast that I thought, okay, we're going to blow off top. Volume comes in here heavy, and then it starts to dwindle, and then we come back and we get our bottom. At this stage, and it's a little bit cloudy still because, and I'll tell you why in a minute. At this stage, I think what will happen is, had I reset the cycles here, that we would have stayed on a buy into May of 2017, because it's basically the start of the new long-term cycles. As it worked out, okay, we stayed long over to here, then we got out. The CTIs, I think the leverage things were off about 10% right now, mainly because of the NASDAQ is up, I think, 17%. But if we would have sat here, we'd have been on a buy all the way through this period. So we've missed about 4 or 5 weeks here that the market continued to work higher. However, over the next 2 or 3 weeks, the intermediate term cycle also, bottoms out on this. So the next 2 or 3 weeks, we could see a pullback still. I don't think you're going to see a pullback where we come back and challenge this, where I go, okay, this is where the cycles are going to reset. So I'm looking for a little bit of a pullback, just because one of the the major cycles is going to bottom over the next 2 or 3 weeks. I'll keep my eye on the momentum index. Remember, I look for confirmation in that and sentiment to see what to help formulate the market posture. And if we start to see like a -2 or something like that, we may we'll probably stay bearish. If we get that neutral +1 +2 on the momentum index, we can move the market posture to bullish again, and we'll the count will start it here, but we'll still remain bullish probably into May. So there is a little bit of cloud over here over the next 2 weeks or so. We'll see what happens. Right now, like I said, we're the CTI owning all 4 of them. If you're leveraged, we're off about 10%. That's about my pain point on these things. But so like I say, we still could get a little bit of a bottom in here. It doesn't look likely to me at this stage. So we'll probably be resetting there. And I hope that like I said, we made 70% on the last year. So we're going to be right about 3 out of 4 times. I think last year we were right 4 out of 5. So we'll kind of keep on this to see what happens. And if you have any more questions about either the trades, or any questions about the early entry buys, go ahead and start typing your questions in. I've been going about 30 minutes, which is about as long as I like to keep this thing. So I'll wait a minute to see if any questions come up. Oh, one question did come up. I had a gentleman who wanted to know if he's looking to buy a stock. He gets 3 stocks that come up. One has a second opinion of long. The scores are -1. And the recommendation is a buy. Stock number 2 has an opinion of longs, a score is 0, but it's overbought. And number 3 has an opinion of neutral from avoidance, an early entry buy candidate. Which one of these would be the better bet? A tough question, but it's hard to say which one. You know, what I generally will refer to when I'm looking to buy a stock, I generally will look at the 50-day relative strength, and I'll see which one has the higher relative strength. Now, I don't want the thing to be like a 1.89 on the relative strength, so it's up 80, you know, outperforming the Dow by 80% or something like that. But if I have like a 1.24 and a 1.10 and a 1.01 on the 3 stocks, I'll probably take, for the trade, I'll take the stock with the higher relative strength. Now, if I'm looking for more of a swing trade or a little bit longer lasting, then I might look at the early entry buy. And if it was like, say, a financial where you have something where you're going sideways and now you're starting to break out and the overall sector looks good, you know, I could go into that. A lot of it depends, though, on your time horizon. If I'm looking for a quick pop, I'm going to go into the stock that has the highest relative strength. Okay, we're getting about 3 questions in here, so I'll try 4 questions. I'll try to get to these real quick and as you're putting them in. Okay, Jonathan wants to know what the CTI. Jonathan, I'll have to get back to you on that because we talk about the CTI. It's our proprietary cyclical trend index, which we use to formulate our market posture of whether we're bullish or bearish. Would you look at the stock with the strongest fundamentals in this case? Yeah, I certainly would. Look at, you know, that's why I don't like to have things just as a black box. But then again, with the fundamentals, you know, it's pretty much built into the stock. If this thing's going up and the fundamentals are still poor, traders are either looking for the fundamentals to improve, or maybe they're going up with that sector. But if we're just trading, you know, I'll look at the technicals. So the money slope. I always want to see the money slope. Let's just say this was the 50-day money slope here. I'm looking for this thing to be rising. I don't want to be buying when this thing's going down. If that's the up-down slope, the slope's down. That means the stock's under distribution. I'm not buying a stock that's the slope is down because you don't know how if it starts to break support and it's still under distribution, that thing's going to fall out of bed. And you're going to get stuck with where you bought it here, and all of a sudden you're down here going, I'm dead here. Okay, appears XLV volume. The volume I thought on the healthcare was, okay, this was a problem for me, yeah. Okay, look at this. Okay, here's the healthcare. Some of the drugs are moving up. But look at that volume. That's not confirming that this thing's breaking out to new highs. I like the biotechs. I think with deregulation, they get the drugs quicker. But this is really a red flag to me at this juncture. Just over here, I'm thinking I want to buy. But again, with this fall off in the volume, I'm not going to chase the drug stocks and biotechs right here. They can. This is telling me we might get a little bit of a pullback in that sector because it's again that the indicators are good, but again, technicians look for volume to confirm, and that certainly is not confirming what's going on. Okay, to confirm at this stage, you are not going to change the market posture by the end of this week, right? I don't know. We could change the market posture to bullish at the end of the week. I doubt it. The reason I doubt it is because I'd like to see. The only reason is because, like I say, with the 18-week cycle bottoms here over the next week or two, I wanted just to see it. This thing's so extended. I can't believe that we don't even have a little bit of a pullback. It had 10 points today with Yellen up there saying that she needs to raise rates, and they look great. Let's buy it. Okay. So you'll have to read Friday. I'll explain a little bit more about what we're doing with the CTI. Okay, when you do change market position, we'll be in the daily market letter, not the daily, because we make the adjustment on Friday, not midweek. Now sometimes if we're switching, like if we're on a buy or on a sell, and we take out the intraday week, and I want to watch that also. If we take out 20,002, I think it is, or 20,020, when you make a new intraday low during the week, that will offset our, that could leave us, you know, holding out a little bit longer to see if we're going to, you know, maybe the market's going to pull back a little bit more at that time. That would be the only time I would say what we're going to do in the daily market commentary. Okay, that's all the questions we have right now. I appreciate you joining me. Again, if you have any questions about what we talked about, you can email me at the doc@marketedge.com or support@marketedge.com, and I'll get back with you personally, and we'll talk about what's going on. The main thing I wanted to talk about though today, again, was the early entry buys. I think that if you, you know, you look at those for stock, especially in this market where everything just goes up, you know, the fact that these stocks are under accumulation, breaking through a resistance period, and could be starting a new leg up, that would be where I would look to buy. The tech has the same risk as XLV regarding volume, right? No, I don't see. Tech has a little bit of falling volume, but not quite. Well, okay, yeah, you're right. You got me on that too. Okay, yeah, you do have a little bit of falling volume. What this is telling you, this means that the institutional and you know, big traders aren't chasing it in here, which means that you're a little bit of a toppy. You know, this is a positive divergence. This looks like it's going higher. You're way overbought, but the big money is saying, you can have it here. I'm not gonna chase you know, Google or Amazon or some of these big cap tech stocks at this point. You're seeing less and less money. That's a problem. This thing comes down a little bit more, then you start to see the, you know, the volume, like over here where it's going up, and this little rise here that was going up. Over here, look at this, where this thing started to break out. Zoom. Now some of that was down volume, but you want to see this stuff going up when you're going to that. So again, you're right. The technology sector is telling you that, and health sector that no, the new money's not going in there. Okay, I'm going to wrap it up. I really appreciate you taking time out of your busy day to join us on this. I will we'll be here again next Tuesday. If you have some ideas about future webinars that you'd like me to talk about, please send the ideas. Sometimes it gets a little tough to come up with some new stuff. Thanks, and have a good week.